Hey, greetings. Dr. Jeffrey Scott. This is my Market MRI Pro update for, what is today? Today is Wednesday, and I guess that must mean it's the 11th of February, 2026. I'm doing this on the road, so I don't have my usual setup. So if audio sucks, I apologize, but I guess a bad sounding video is probably better than what I did last night, which was no video at all. Um, I still continue to be impressed by the divergence between the NYSE and the NASDAQ as the divergent markets continue to chop. And I wonder if we're approaching a seasonality trap. Again, it's February 11th, 2026. Jeffrey Scott, marketmripro@gmail.com. Google Group is Top Down Trader, and my website's marketmripro.com. You know, I do these things for free. I don't ask much. I don't care if, well, I'd love for you to buy my stuff, but frankly, if I can help you, whether you buy my stuff or not, that's totally cool. I do ask one big favor. There's going to be a link in the video below on the remarks or above the commentary. If you could just click on it and register for the upcoming meeting that I'm speaking at on Valentine's Day. It's free. If you show up, great. If not, you'll be entitled to a copy of the video if you reach out to me. I'd really appreciate it. As always, these videos are for educational purposes only. If I talk about specific stocks, it's in the spirit of education, should not be considered investment advice. The intent of the video is to show you how I use my tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I've got tools for multiple platforms, but am an independent trader. I only have one mailing list, frankly, even if there is such a thing. It's called Top Down Trader. It's a Google group. When I say it, even if it's such a thing, I don't keep the mailing list. You sign up, you control your participation, how you want to be contacted. But when I put out videos, I tell people I'm Top Down Trader so you know to go look. Sometimes I don't share my videos with a wider audience. I'll even have closed educational seminars that I teach people, or like the last time I had an open invitation for the top-down trading teaching, but then on the options teaching, which I did live and open to anybody, I only share that and the PowerPoint slides to the top-down trader group just to sort of protect me because getting things out there, the broader group that my options approach is controversial. It's probably better to keep it to people who know me. Know your news and earnings. So what do we got on Wednesday? Well, Wednesday we had the employment report, and it came out strong, and the market seemed to like it. And I think that's good. And it really suggests to me that the market's not really sitting here expecting a rate cut anytime soon. I think, frankly, if anything, markets are waiting for the new Fed head to come in and see what he's like. But tomorrow, Thursday, we got jobless claims, and then Friday we get the CPI. So there's still a lot to go this week, to say nothing of the earnings. This evening, there were quite a few earnings. And as I often do during earnings seasons, let me just tell you some of the highlights from tonight's earnings. Cisco, I remember Cisco would always beat by a penny and have a nice response. Well, they were down 7.1% after hours. Rollings was down 14.7%. QS, which I think is QuantScope, here they are, was down 11.6%. PAYC, which is probably Paycom, was down 7.6%. INSP was down 7.3%. And then we had some big winners. Fastly up 32.5%. Woohoo. PRCH up 18.9%. MH up 18.3%, EQIX up 9.9%. And then there was one healthcare related episode that came out. Novacure had its interesting therapy extended to pancreas cancer, which is a big move for them. And they're up 56.8%. So congrats to somebody who's already holding that, because that's the only way you get that win. And then the other big news that's occurred over hours is Trump is pushing for more coal-fired electricity. So you can imagine that BTU, which we talked about here probably a week ago, and other coal stocks will probably get a little jolt out of at the open. If you look at futures right now, a little bit higher. Dow's up 81 points, NASDAQ 6.5, E-minis 11.5, gold down 11.5, and Russells are up 7.1. Let's go take a look at the markets we just had. I would keep in mind what's my quote in the lower right hand corner. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about, if you have an inquiry about purchasing my program, just reach out to me at marketmripro@gmail.com. Now, there's another option as well. And I'll show you, hopefully, if I remember. If you go to the Windows Store and search for Market MRI Pro, you can download the program. It's a $7.95. Sort of ridiculous because it's for 3 days, but not really, because you know what the program could do. You just reach out to me at marketmripro@gmail.com. Give me the name you registered under, and I will extend it for 30 days of a trial. If you're current customers or with any issue with the product, coding at marketmripro.com can help you. All right, so let's go look at the market we had. And while I remember, if you open up Windows Store, which almost all of us have, if you have a Windows ID, for sure, you type in Market MRI, and it's going to bring you up to this page. Now, yours is not going to say open unless you've already subscribed. It's going to say, I think, $7.95 or $9.95 for 3 days. But again, download it, register it, and then sometime before those 3 days are up, reach out to me. I'll share with you some of my teachings so you can better use it. And I'll have Praveen, my partner, extend it for a full 30 days. If we look at the market we just went through, the Qs up 0.27. For today, dollar up 0.11. That was it to the upside. Spider down 0.02, relatively flat. Diamonds 0.11. Volatility down a bit. Russell down the most. And I guess the thing that I didn't like about the Russell was the volatility. Up as much as 1%, down as much as 1.5%, finishing closer to flat line at minus 0.45. And Bitcoin had a positive day, which we don't see often. And if you look at the 5-day move, it's still down considerably at 7.89%. If I look at one of the breadth measures, which I like, is looking out at 12 months and look at the new highs minus the new lows. And we're really getting ripe and probably extended on the NYSE. And we're negative on the NASDAQ, just one of the signs of the very big bifurcation in market performance. In fact, if you look at the S&P 1500, only half or 49% of stocks were up. In the NASDAQ, it was only 32%. And the NYSE, no great shakes, but it was 50% up. If we look at S&P 500 sector performance, you could see leadership was in energy, staples, and materials, and laggards were financials, communications, and discretionary. The defensive stocks were kind of in the middle. From a theme perspective, a kind of a muted day. Gold, silver, lithium, semiconductors, oil exploration, copper, all up 2%. Data centers remain strong, Internet of Things, Southeast Asia, MLPs. And if we want to look at where the big laggard was, we can see in the one-day change, fintech, cloud, software, blockchain, cannabis, e-commerce, Dow Jones Internet. Boy, a lot of the growth stocks. I wonder what ARKK was today. In fact, it's here somewhere. But a lot of things that we like to look at were actually down. Now, timing model on the weekly model, if you look at the line below the charts, it is in a buy signal on the Spider, the Russell, and this is the diamonds. We are in a sell signal on the Qs. If we flip on Friday the bongo to an uptrend, then we will go to a buy signal. I don't think we're there yet, But if we end the week with any strength, we might come out of the sell. So right now, my timing model, if I looked at monthly very quickly, it's going to be all in a buy. And the monthly, even if it changed, it doesn't count until the end of the month. The weekly is 3 out of 4 in a buy. And the daily, we flip to the daily here, you have 3 out of 4 in a buy. So for the most part, I have to still be long this market. It's hard for me to short when the monthly and the weekly and most of the dailies are bullish. But I remain cautious, and we'll look at some of the reasons as we go forward of what's driving my caution. We'll talk more about the charts here. If we look at the U.S. index ETFs, let's hit the make them bigger. So there's a lot of lines here. I like drawing lines. This is the 100-day moving average. It was the break on the fall in November. It was the break on the fall in February. The market had a nice rally and rallied for a while, not quite to new highs immediately. Then it pulled back here to this line, and then it's been running up. Now, if you step back, to me, it kind of almost looks somewhat sideways with, it looks like the last intraday high being there, and the last closing high is probably in this range here. I guess it's probably this bar. So we're not that far. We're kind of in an ascending wedge. One would expect it to break out in the same direction that it entered, and that would be higher. But I mentioned the seasonality is in a trap, and you can see part of the story here. As you can see, we still got a couple more days. You expect it to go higher, but then we get to the reversal. Now we'll look at everything. Where's the peak come in? Sometime around February 17th. So we'll see if anything happens there. This is the spiders. Is it time to get out? No. I think as long as we stay above this line, no reason to get out. We're not even below the 21 in this light blue or the EMA or the 17. Simple. If we look at the diamonds, the Qs, I put this green here because it's kind of like it's in a Darvis box. And how long will it stay in that box? I don't know. Same pattern, though, where you might expect a little bit of a run up, and then this is when the market reverses and pulls back. And when is the peak day? The 13th of February, 13th to the 17th. Now notice in yellow is a 5-day seasonality, in the red is 10 days, and in the white is all time. And that goes back, whoops, I didn't want to do that, guys. But that goes back a long time. So short-term pullback, into the middle of March would not be historically unusual. Diamonds, boy, these are the best, aren't they? Just off all-time highs, which they would have hit yesterday, closing highs, which they would have hit yesterday. But like everything else, look at this, February 13th, 17th, we hit a seasonality high, and on the 3 time frames, there's a pullback. Is it a bear market? No, it's not a bear market. It's a modest pullback. But considering the chop we're in many of our accounts, something to be aware of. If I look at the Russell hit a peak up here. This is an all-time high hit during the day. Not far off of it. The same seasonality pattern around the 18th, 17th, and still above the 21 and the 17-day. So it's hard for me to be bearish any of these, even the Qs, which are kind of in a trading range. Now, if we look at the next one, which will be volatility, I continue to be concerned. One, seasonality is heading up on volatility. Makes sense if markets are heading down. And then the other thing is, why aren't we coming back to a resting phase down here? I think volatility is still telling me, be careful. And then the dollar is really doing nothing. Not only is it doing nothing down here, it is so far off the highs, I don't think it's contributing much significance. And so unless you are the, I need a strong dollar to be happy guy, it's making our goods less expensive elsewhere and probably helping some of our trade. If we look at commodities, gold, as you might expect, is congesting after this big correction here. How big of a correction? So I got a tool for that. I love saying that. Let's just hit it on this. So if we go from the high to the low, and I did that wrong. Let me try that again. It's okay to have tools, but you got to get used to them before you start showing people how to use them. I think I just have to hold on to it. Now, it's embarrassing. We'll try one more time, and if I don't get it, I'll give up. Do I hit it? It might be that I hit it. I drag I'm off the mouse button. And so here we had from top to bottom, a 20% drop in 4 days. Pretty big drop on GLD. We're going sideways here, which is what you'd expect. Now that may look stronger than silver does, as silver is much lower in the pattern. It's below the 21-day EMA in the 17. And if we look at the damage that silver had from its peak to, I'll go as far as the low here. Here we have 7 days and a 67% return. You got to be careful when markets are in climax runs, is what the message is. Would I be buying gold or silver here? I might be buying gold. I think silver's got too much damage to repair. Just go back to 2011 and see the same story in silver at a smaller high level and how long it took to regain or get close to the prior highs. The buckets will give me a sense of market extension. Now, it's interesting in that you've got 10% above in the NYSE, which is nothing to write home about, but it shows that it's pretty ripe here, and a lot of stocks at the top of their Bollinger Bands. Very small numbers on the NASDAQ and the Russell. S&P 1500 is kind of neutral, 9 above, 8 below. And then we look at the Russell, and we see that 10% of the stocks are below their Bollinger Bands. So this is a tale of different markets here. We are not all marching to the beat of the same drum at the same speed in the same direction. That increases volatility a bit, increases our risk a bit. If I look at market breadth, again, you want to see divergence. On the left is the NYSE. NYSE sets today all-time high, all-time closing high. You look at the high-low jump, which says, boy, I'm extended, I need to pull back. So that's a caution sign to me. Extended things can get more extended, but that is a caution sign to me. The distance here between the close and that 200 is getting very far. If we look at some of the other breadth indicators, stocks above the 20 in green, 50 in white, 200 in red are getting elevated, but they're not to where they were here, which was recovery time, here where you had a small pullback. This is real helpful when they're really low. So that's not neutral, but it's not giving me a signal. If I look at, if I look at the up-down volume, very positive, AD line, positive, but not greatly positive. And if I look at up-down, the up-down New York dollar value, it's up, or up-down volume is up. If we look at the NASDAQ composite, it's very different. It's below the 50. It is a negative day. Stocks above the moving averages have fallen. Now, this is bad. This is nothing. So it's not giving me a signal. But not only are the stocks above the moving averages down, the new high, new lows negative, AD line, and up-down volume negative. Not good. And then if we look at the 13-week new high, new low, which is a short-term extension sign, not a problem yet on the NYSE, and not low enough to be meaningful on the NASDAQ. Divergent markets, and I have concerns about where my portfolio goes if I just stay long and don't think about this. Therefore, I am a money management portfolio protection mode, which means on days like this, I let some of my options get closed out, and I raise cash. I've got protection, but I'm still net long. If I look at the larger market breadth tool, you can expand out, look at that 13-week on the Spider, 0.79, 0.78 on the S&P 1500, 0.38 was on the NASDAQ, 0.59 on the Russell, no other real big signals. So I put all this together as market, I think's at risk. And I think that seasonality, it happens at every time frame. Yes, we could go up the next 3 weeks and set new highs. I think the overall pressure is that we're probably going to sell off a little bit starting next week into March. That's why I start raising cash. Now, options expiration is next week, and I may not wait to expiration on some of my February options because I'd rather sell them a little bit early and give up some of my potential gain to avoid losing the whole gain if the market rolls over. Everybody's going to approach the market on their own. I didn't point out the obvious for those that follow me that we are in confirmed Hindenburg-Omen signals, which are these triangles here. And we've got confirmed Hindenburg omens on both the NYSE and on the NASDAQ. And you see these 3 orange, those are significant, exuberant buying to the upside. Could be a topping signal, and that's on the NYSE. These are fabulously interesting markets. Now, what sectors are working? So if I look at the S&P 500 sectors, and these are ratio charts where I'm comparing what's the letters in the box, ratio chart versus the spider. It's a short term, and for short term movement, I want to be sitting up in this upper right hand corner. Well, Bitcoin is the opposite, horribly weak, but materials look good. Energy, staples, industrials, real estate look good. Discretionary, horrible. Technology, not so good. Healthcare sold off some. Financials have weakened. Communications have weakened. And if you were to go back, say, 2 months and watch my videos, you'd see that's all flip-flopped. It's as if this market is small caps, especially material stocks and energy stocks and industrials and NVIDIA. Certainly not the broader max. If we go into a regular chart of the various S&P sectors, let's just take a quick look at that. Again, is there any signals that we might want to bring into our trading plan? Bitcoin, I'm not a Bitcoin person. My son is. And if he was asked me what to do, I said, well, I would have sold it a long time ago. Like when you broke below the moving averages and had a sell signal. At this point, I don't think I'd let it get much below that wick and hope that it bounces and goes higher. Now, I know a lot of people with Bitcoin just hold it, don't care what the chart is. That chart's an ugly. I like to give grades. A, outstanding. B, good chart, maybe not ready. C, neutral. D, not horrible, but not great. And E, I would avoid unless there's a reversal. That's E. This is a C. This is technology. So my buy-sell indicator is a negative. I am below the 30-week MA, the 30-period WMA. It's a daily chart, not a weekly. The 50-day in white, the 21-day EMA in purple. I got a sell signal. I've got no business being long technology right now, unless I think I know something the market doesn't know. Unless we're talking long-term portfolios where you're willing to deal with the highs and the lows of your portfolio. If you look at discretionary, also weak. This is probably a D, almost a C, but you've got a sell signal. You're below the moving averages. I look at the next one, communications, right on the moving average with a sell, a C. Nothing I want to go run out and buy. Next one, A, industrials. This has been one of the big winners. And frankly, it's been running up and has been attractive to me since November 26th. Data centers. Financials, these were good, but they've broken down. They're now sitting on the 200. Now, this is the perfect place to expect a bounce. So it would be on my, it's an E, but is this something that might reverse soon? So I might keep an eye on it, but I also see it had a a momentum breakdown with big volume today. Well, we'll see. Is that crescendo volume and climax volume it's going to turn around? I wouldn't be owning it until it gave me a reason to. Energy, A+. Hard to get back in. I wonder what coal stocks will do tomorrow. Materials, also a nice A. And notice how consistently above the moving averages, even when they pull back. Now, you may notice you can't tell the difference between the 30-period WMA and the 21-day EMA, and that's because they superimpose. But a lot of people watch IBD, investors.com, and they like the 21-day EMA, so you got it. So materials look really good here. All right, what else do we got? Real estate, these have done a recent turnaround and recently popped up here and look pretty good to me as well. This is a more recent turnaround. I give it a A to a B. Same thing with utilities with a new breakout here. And then staples looks great. When do staples typically look great? Staples look great during tough times of the market. They're defensive. They pay dividends. How bad is potato chips and Pop-Tarts going to do if the economy goes through issues? And then here we are at healthcare, which had been very strong. And now when you push it out, I don't give this much worse than a C. It hasn't really broken down. It's a sell. I don't think I'd be jumping, but that's a strong candle today. So maybe we're going to get a reversal here and go higher. So C, B-. And the next is Bitcoin. So I used to look individually at each of the MAG stocks, and I said, I can make my life easier and just put them in here. Key stock timing. And all I got to do is this. And let's just go very quickly and comment. Amazon, disappointing on earnings, bouncing around after a pretty significant sell-off. No buy. Apple, it's stalling here after it had a nice run out. Nothing wrong with it. Kind of, sort of, might not buy it in that range, but if it breaks out above it, it might be interesting. It's got a lot of support underneath with the 50. Can't fault somebody from owning it here, though. Google, boy, more disappointment. Another stock that struggled and has struggled post-earnings. Meta, lovely post-earnings, and it's given it all back. Kind of in not that attractive land. Netflix, well, it's dealing with the fact that Paramount just raised its bid for Warner Brothers, which means Netflix is going to have to pay more money, and they're still going to have to deal with tons of stuff with the Fed to get it approved. And I not be buying Netflix here. Tesla, I'll put this kind of like I put utilities and some of the others that sort of looks interesting. Had a new buy signal. I'd rather see it above the 50. But Tesla looks pretty good compared to the peers. And then the one that I think is still the most actionable is probably NVIDIA. But, I kind of thought NVIDIA would go sideways until it got its earnings. And frankly, it's going sideways. We'll see if it can break out of this. It's a wide, that's 15% there. But this is probably going to chop around until earnings, and I believe earnings are next week. Microsoft, oh man, I'd like to see Microsoft recover, but unfortunately it's a software stock, and everybody's so afraid of their CapEx. But you know what? That money has to go somewhere, whether it's memory, whether it's optical cable, whether it's energy for data centers, whether it's data centers. There's so many things that are good in the space, but the software stocks, not so much. Plus, people are afraid a lot of the software stuff can be replaced. Biotech, man, I was ready to write it off today. And then look at the hammer signal. So we'll see if biotech can build on this tomorrow, or is biotech done? Would I be entering a big position of biotech here? Absolutely not. I like biotech. It's always been a big part of my portfolio, and I don't have much right now. And I will dial up LABU if it gets above the yellow line and I get a buy signal. Pharma holding up better, little flag here after the run. And then we got the data center ETF, which still looks strong. Look at this here, all-time highs and a fresh buy signal. And then lastly, this buy has been a disappointment. Now, I'm sure on my urging, several people bought HWM, which I believe has earnings tomorrow. And HWM kind of looks a little bit better than the ETF for the group, but it still had a pretty significant pullback here. And like I said, I believe it has earnings tomorrow. And let me click this once. Earnings the 12th, it does. All right, so let me put ITA back here so I don't forget. So look, I've probably 20, I don't see a timer because I'm using one monitor here. I know I've gone through a couple of dancers on the Olympics I'm watching as I'm talking. So I'm probably 25, 30 minutes in. I don't feel like giving you hundreds of stocks to buy right now. But what I will show you is just some of my approaches. I go to the JS layout. I go to the top-down window here. I have 3,600 stocks. Market has lightened up because you have to be above $1 and above 100,000 shares to make my list. And if we look at the leadership, look at percentage, I see energy, utilities, basic materials. Then I get the industry groups that come from there. And we rank the top 10, 1, 2, 3, 5. I'll go this far. A lot of energy, as you could see, 180 stocks. I like to put a filter on it. I don't want less than $5 or 500,000 shares. Leaves me with 122. I then rank them by the number of positive impulses. And I take a look if anything looks buyable. HPK, high peak energy. I don't know what it is, so I hover over it. And it tells me independent oil natural gas company. Okay. Liquid natural gas, good. I don't care about extension when you're sitting below. And by the way, it's at the top of the band, but it's only at minus 16. It goes from negative 100 to a positive 100. I prefer buying above the 200, but good volume, relative strength, and OBV breaking out. I've got momentum, breakout, and volume, and a CPR. I actually think that looks interesting. I'd rather buy it above the 200, but that would be okay. X-Pro is an oil energy services company. We can go up here and see what it does. Provision of energy services. I open up this box here. I see some fundamentals. Next earnings is next week on the 19th. It's going to have 21 cents versus 36. That's not that exciting. I can see the earnings growth is kind of erratic. I like the chart. I like the seasonality. I don't like the fact that earnings are coming up so soon. TTE, integrated, I believe, total. Integrated oil and gas. So it's got all the different segments, including solar, biogas, and more. You can read about it. Open up this, $1.62 versus $1.90. So a lot of these oil stocks are going to have volatile earnings. This pays a dividend of 6%, breaking out to a new high. This one, I would pay attention to high jump. It's getting extended. It's at 100%, so I might be careful of that. Rig, God, this used to be a $100 to $200 stock. I remember those days. Is it a turnaround? Breaking out? Cheap stock? 9 cents against a minus 9 cents? Well, it might be something to look at. So you can go down the list. I mean, NOV, more. Let me find it here. Oil and gas drilling and production. So it is clearly today was driven by energy. So one way I like to do it is top down. Now let me clear these and then I'll finish up by just looking at a couple of my favorite scans. One of my favorite scans, I got to go back to the base. Again, this will be all of my 3,600 stocks, unless I have a filter on it. And now it's 3,600. Why? Oh, base and top down. And I got to go to the impulse that's sitting over here. And now I might run a couple of scans. My A plus, these have been really, there's been a lot of winners with this scan. And those that follow me know how much I like this. So MCHP is the only one that made the scan today. And what it's looking for are these two blue momentum dots occurring at the same time. If you go backwards, here's the last time it happened. And look what the market did afterwards. It's had a massive run. This has been a repeatable pattern. Two dots, the first one above squeeze, this one squeezing, relative strength and OBV look good. I love the pattern. Ooh, I got a couple more as I had some more time to scan. AER. Wow. Pull back to the 50 and a breakout, good seasonality. Earnings are in April. Beautiful. CYTK. Nice base breaking out here. Earnings are 26. Healthcare, HCSG, Services Group. Big gap up, probably was earnings. Let's see. 48 cents versus 16 cents. That's a big, or 43 cents rather. That's a big change, a massive surprise. Wall Street rewarded it. Massive volume. Is this an episodic pivot? I think so. This might be one that goes a big run. It's getting extended, which is the only problem. JHX. Earnings were on the 10th. Nice breakout, but I don't like where it closed. NXPI. I looked at this not long ago. So this one's breaking out here. Decent volume, double momentum, relative strength OBV. Earnings came out on the 2nd. I like that. So do you notice how beautiful these stocks are? And almost every one of these is actionable. Site 1, it's extended. That's the only problem. Earnings in April. So the earnings were a couple of days ago. What's SW? What a name. Smurfs. So the Smurf Company, what does Smurf Company do? Sheetrock or container board, corrugated containers, other paper-based packaging, boring. But sometimes boring is good. Does it pay a dividend? Not much. Less than 1%. I guess. TDAY, USA Today, it's an IPO. So here's a simple scan of which you could probably act on if the markets hold up tomorrow, 4 or 5 of these. Now I have another scan I like. That's the A scan. These are my pullbacks in an uptrend that are breaking out. So let's just pick one to look at that we haven't looked at. This is an expensive one, Regeneron. So uptrend, pull back to the 50 and a breakout. And on decent volume, breakout momentum from a squeeze, good relative strength OBV. So this is often a great list. And then I have my new list that, to be honest, blew me away. We did this during the webinar that I did a couple weeks ago, and I now call it my Rockets in Flight list. And all I can say is, wow. So what I wanted to show you was something's not working right. If I put these into a watch list, you're going to see stocks that base and then the list takes off. And when I say these are rockets, they're rockets. So I'll get this adjusted. I'll show you this tomorrow night. I will tell you I've been studying that list and I'm amazed at how good of stocks it comes out with. So let me summarize. It was another choppy day in Wall Street. I watched my balance go up, down, finish up. Mixed earnings after hours, but some real strength. Futures are trading higher. Bad seasonality coming. Money management matters. See you tomorrow. Thank you.